Hello everybody, welcome back to the channel. It seems that here in 2025 we are seeing more and more consumers and investors being aware of the potential of a recession as we are seeing massive trend changes. We're seeing changes in the way that people are investing and changes in the way that people are spending their money. First, I want to bring your attention to some signs that we are seeing. As we are seeing economic signals flashing caution, headlined by a contraction in recent GDP figures and corporate warnings over tariff impacts. They appear to be prompting a tactical shift amongst investors. As market uncertainty seems to rise, the historical defensive consumer staples sector is drawing renewed attention, potentially signaling a broader move towards recession-resistant portfolio strategies. Evidence of increased interest, including tentative signs of inflows into the sector focused on funds early this year, suggests market participants are revisiting the merits of stability. This renewed focus brings industry titans like Coca-Cola, PepsiCo, and the Procter & Gamble company back into the frame as anchors with a turbulent market narrative. So, a lot of people are obviously scared of the potential of recession. It seems to be growing more and more likely. We're seeing an economy now which seems to be only being propped up by rich people. Essentially, over the $100,000 crowd is single-handedly warding off a recession. So, money may not buy happiness, but it certainly does buy stuff, and buying stuff is the heart of consumer-driven economic engines. Lately, it's wealthier people, in particular, who have been keeping that engine running. The better off don't love high prices, and they're feeling uncertain, but they're still spending through it all. And everyone is increasingly dependent on keeping them going. So the immediate post-pandemic era is seeing a change, right? We're seeing a massive change in the way that people are spending. We're seeing a massive change in the economy. And again, it seems that the consumer story has been split in two, as lower and middle income people have had to pull back on their spending, and more affluent people are still able to spend, right? So higher income people have been able to brush off some of those concerns thanks to rising stock prices and a solid housing market. People who own assets in the last couple of years have obviously benefited from some of the inflation. Higher income families have been doing more than their fair share of spending. Companies have picked up on this split. Walmart has said that high income shoppers are boosting its sales. In its most recent earnings call, McDonald's said that they are seeing a divided economy with steep declines in traffic from low and middle income consumers, whilst high income visits remain solid. The wealthy do well, and the wealthy and the well-to-do are driving the economic train. And that's always the case, but it seems to be to a greater degree now. As this split continues, we're really seeing this two-tier economy. And again, you can make a very strong argument for the fact that the economy at the minute is only being propped up by these wealthier people. Let's be honest, the average person out there does not have that much money to spend. And if it's the case that only a few people are keeping the economy running, it's going to be really interesting to see how long that will be the case for. Then we've got warnings of tariff uncertainty driving the global economy towards a recession. Now this really is a big story. This is a report coming from the UN Trade and Development, which is called UNCTAD. And they are suggesting that in April, concerns over a global economic context and an impact of a trade policy have shifted and translated into major financial turbulence. So global economic growth is now predicted to reach 2.3% this year, below the common 2.5% threshold needed to avoid a global recession. Growth rates across the Americas are particularly low, with continents expected to only see 1.2% this year, down from 2.6% in 2024. Now, of course, the trade policies that we're seeing recently are not going to be helping. Actually, it's going to be hindering things more and more. And now it seems more and more likely that we could be facing a global recession. It really is quite worrying what we're seeing here, guys. But this is the real world impact of tariffs and of what really has been, or what seems to have been, a struggling economy for realistically quite a few years now. Again, it seems that the stock market and the broad economy may have been quite decoupled in the last couple of years, and perhaps they're just coming to meet in the middle. Let me know what you think in the comments, guys. As always, thank you for your time, and hopefully I'll see you again soon in another video. Thank you, and goodbye for now.